Boom! What's up, Waves Capital? It's Royce Jacob. Welcome back to the channel. And in this video, we are going to be discussing the concept of crypto contagion, which has really taken over the markets and become somewhat of a buzzword in the space for good reason. So I want to give you guys my thoughts on that and to establish our base thesis and kind of explain to you guys what crypto contagion is in the most short and sweet way possible. I want to read over this Axios article written by Felix Solomon. It's titled FTX Collapse is Looking a Lot Like Crypto's Lehman Moment, which is of course the Lehman Brothers collapse, which is the bank that collapsed in 2008. Okay. So again, short and sweet, this article is exactly that, and I do feel like this will provide some value to you guys if you aren't necessarily familiar with the concept of contagion. And at the very end here, when he sums it up, there is some reason to be optimistic, which is really what I want the underlying theme of this video to be. You guys know that I'm a pretty optimistic guy by nature. I know it's difficult and a bit irrational to come off as an optimist in this moment in time, or at least it seems that way. So I want the underlying theme of this video, although objectively we are talking about some bearish fundamentals, some bearish technicals. I want to explain to you guys about why I remain optimistic as we progress through the final quarter of 2022 and heading into the new year of 2023. Okay, so kick off the video excuse me, by reading over this article. After that, I do want to dive into Bitcoin on the charts because BTC has just successfully executed a pretty textbook bear flag formation, the evil sibling of the bull flag. And again, technically, it would be foolish not to be bearish on Bitcoin right now. But again, I want to provide a bit of optimism and just talk to you guys about what I'm seeing on the charts. So we are going to take a look at Bitcoin. We will also be looking at Coinbase because it's been a while since we covered it here on the channel. I want to give you guys my thoughts there. And Coinbase did reach a new all-time low today. So take a look at Coinbase. We will not be looking at Riot blockchain today. I'm sorry, I covered that in the newsletter, but we will take a look at Bitcoin and Coinbase on the charts. And I also want to talk to you guys. We'll take a look at a few of my recent newsletters. Talk to you guys about why I'm still very, very bullish and optimistic about Coinbase as a company over the future. I don't think there's any potential for bankruptcy here. And I really don't think that there's going to be, aside from general sentiment, disruption of consumer and investor sentiment, I don't think Coinbase is really at much risk from this contagion factor. Okay, and I did feature contagion here as well, which we will just kind of round back out to. Okay, at the very end of the video, after we discuss Bitcoin and Coinbase on the charts, I want to give you guys my thoughts on the current state of the market, why it's important to remain optimistic and really stick to your game plan when times get hard. You know, rough seas make for skilled sailors. So I want to talk to you guys about what's going on. Thanksgiving is this week. Excuse me, guys. I'm just coming over a little bug, but I'm feeling good. Thanksgiving is this week. The holiday season is officially upon us, and we're off to a pretty rough start. But again, I'm optimistic. I feel like, you know, there will be a little extra gift giving this year. Hopefully it's all uphill from here. So at the end of the video, I want to discuss just a few of my thoughts on the general state of not only the crypto markets, but the equity markets as well, and kind of how I'm working my own portfolio. Okay, so that's the video, you guys. Before we get to reading, please give the video a like if you do go on to gain value from today. Subscribe to the channel if you're new around here and want to join Waves Cap. And let me know in the comments down below what you think of the markets right now. Do you think new lows? I mean, do you think even greater lows are ahead of us, I should say? Or are you using this opportunity to load up? And yeah, just let me know what you guys are thinking. I always look forward to talking to you guys in the comments, okay? So, collapse. Lehman moment. Crypto's Lehman moment. Why this matters. The collapse of FTX is the most consequential failure in the crypto world the crypto world has seen since Mt. Gox disappeared overnight in 2014. Those are old days. Let me know when you guys got into crypto as well. That's something I'm always interested in. Quote, it looks likely that a new cascade of margin calls, deleveraging, and crypto company platform failures is starting, JP Morgan analyst wrote in a research note on Wednesday. Driving the news, crypto exchange Binance late Wednesday backed out of a plan to rescue FTX, its smaller rival, after due diligence revealed problems it said were beyond our ability to help. So this is a bit older. I know this is going to be some dated information, but this does round out to the contagion theory that we're discussing today, okay? So by the numbers, FTX has received withdrawal requests totaling $8 billion, according to a communication from its founder, SBF, that was reported by Wall Street Journal. If the window for withdrawals reopens, then that number is almost certain to rise. FTX has not allowed any withdrawals since 6 a.m. Eastern time on Tuesday, which was already almost like 2 weeks ago now. So between the lines, the big difference between the crypto world today and the real world in 2008 is that there are no lenders of last resort in crypto who can shore up the system without bailouts. It now seems highly likely that the FTX will end up filing for bankruptcy, probably in the Bahamas. If that's what happens, anybody with money on the platform faces a long and highly uncertain road to any recovery. The big picture: FTX, along with its sister company, Alameda Research, was ultimately brought down by the exact same thing that killed Lehman Brothers: excess leverage. You guys gotta watch out. That's what happens when you allow 50x, 100x leverage trading on your account. Margin is the killer of many. It was the venue of choice for the world's most sophisticated crypto traders, all of whose trades on the platform are frozen for the foreseeable future. Meanwhile, crypto prices are plummeting. Bitcoin is at its lowest level since November of 2020, and even lower today as we record this. The good news for the US individual investors is that they weren't allowed to use FTX unless you were adept with a VPN or own an offshore trading entity. You probably don't have any direct exposure to the exchange. Where it stands, FTX US, the US arm of the troubled empire, looks like it's the only part of the empire that might still hold any value. As of now, that is not true, but it's tiny compared to FTX proper, and US regulators are very unlikely to let it be used as some kind of bargaining chip. The bottom line here, okay, again, little light, very little light in the darkness. For the time being, there's relatively little contagion from the crypto world into the real economy, but the contagion within crypto world is only getting started. Okay? So, I guess the last sentence is pretty dark, but when it comes to the way that this will affect the equity markets, there's not a lot. Again, crypto is like Web3. Crypto is Web3. Crypto is almost an ecosystem within itself. The beauty of crypto is that it is decentralized, it's borderless, it's as I just stated, it's an ecosystem almost within itself. Of course, there are many ties to hedge funds, to a lot of institutional players that are involved with crypto. A lot of institutions, venture funds, etc., were involved in FTX directly. So in that sense, there is some contagion. But for the most part, this is not like Lehman. This is not like 2008. This is not something that will affect everybody in a very stark way, of course, because over at Waves Cap, we are very heavy on crypto. It's really affecting us. But again, you guys, it shouldn't have significant effects on the equity markets. And personally, again, as an optimist, I don't think it'll have a crazy effect on the crypto markets themselves. But again, we'll see what happens. It's still early. Bitcoin has just executed this bear flag. I'm sorry, I wish it was a bull flag, but Bitcoin has just played out a pretty damn textbook bear flag. And again, technically speaking, as you can see in front of us, I do put the odds at about 65-35. These are just my internal speculative odds that I've set for myself. 65-35 on further downside and probably a retest of macro resistance. So before that, I do want to touch on, I thought this covered the concept of contagion a bit more, but that was in the newsletter. I'm sorry. So I do want to talk, well, we'll just read through this before getting into Bitcoin and Coinbase, and then we'll close it out on the charts, okay? Well, I guess we'll close it out talking about my thoughts on the holiday season within the markets, but let's just read through this first, okay? So the term contagion is spreading like wildfire following the FTX collapse. Big picture, so it's a classic case of contagion. That's when the failure of one institution sets off a rush among customers to redeem their money, which makes the institution's lending and borrowing impossible, ultimately generating a cascade of similar closures from other firms. As I said earlier, I think it was in my Trade Alert newsletter, I believe Coinbase is the white knight in a room full of bad actors. Unfortunately, the concept of contagion is real, and more so, it's a very scary concept for investors. So again, even if the actual contagion factor from the FTX fallout on paper, like the tangible effects of the contagion that came from FTX is minute. The fact that this situation has left such a bad taste in the mouths of many that's like the primary contagion. It's also, in my mind, I'm not as excuse me, you guys, I'm sorry. I'm not as worried about, again, the tangible first order effects of contagion in regard to the FTX fallout. It's more a contagion of sentiment and the way that, again, this is just leaving a shitty taste in the mouth of many crypto investors, and many people who were once excited about crypto are just, out of the space for, not for good, but for a few years. It's the same thing that happened in 2017. It's not surprising that it's happening now, but this is real. And again, it's contagion is a buzzword, but that is for good reason once again. So as I said earlier, Coinbase is the white knight in a room full of bad actors. So to explain that, bad actor is pretty much just, in an FTX and SBF's case, that's more straight criminal fraud as opposed to just being a bad actor. But Coinbase works so closely with the U.S. government. They are so in line with their regulatory filings and just proceeding in the most lawful way possible. And as of right now, if you want to trade, if you want to buy crypto in the U.S., Coinbase pretty much monopolizes the space. Okay, not literally, but figuratively, they are the obvious and leaders by far within the U.S. market. Okay, don't know where coin goes in the short term, but I do hold faith in this company over the long term. Okay, so once again, we'll take a look at Coinbase. Just reached new lows today, but I am staying optimistic, and luckily I'm not trading calls on Coinbase right now, but I do have common shares. I loaded up with a bunch of common shares last week. Wish I waited until today, but that's the game. That's okay. And I still believe this company is going to be very, very successful in the long term. Okay, so before we dive into the charts, you guys, if you want to know exactly how I trade on a day-to-day basis, if you want these daily newsletters that I write every single morning, this is Friday's Price Targets newsletter. This is my second newsletter of the day, where I cover charts, real-time price targets, what I'm doing with my positions. In this one, we covered Unity, SoFi, ChargePoint, Carvana, Coinbase, Bitcoin, Riot, and Render. So again, right before I sat down and record this, I wrote my Trade Alert newsletter. I wrote my Price Targets newsletter, and then I record the videos. So again, you guys, videos are not coming as frequently as they once were, which I feel like is okay for all of us. But if you guys want to know, once again, what my thoughts are on a day-to-day basis, how I'm trading through this holiday season, first link down below in the description box, complete portfolio and daily newsletter. You receive everything that this entitles, a complete breakdown of my entire portfolio, options, stocks, common shares, and cryptocurrencies, literally every position in my portfolio, which I update every single trading day during market hours. And then once again, I send out multiple newsletters, rationalizing my thoughts and letting you guys know why I'm trading the way I'm trading, along with, again, real-time price targets on a daily basis. So that's going to be $15 a month if you want to sign up, $40 for every 3 months, try free for 7 days. And if you don't like it, you can just bail out. But I really do trust you guys will be sticking around if you're not part of the gang already. And if you do sign up, welcome to the winning team. Welcome to Waves Capital. Appreciate you guys. So read through this guy. Let's take a look at Bitcoin and Coinbase on the charts. Talk to you guys about what I'm seeing here, and then we'll close it out with just some holiday talk and my general thoughts on the market to hopefully close out the video on somewhat of an optimistic note. Okay, so Bitcoin has successfully played out this bear flag formation. Again, a bear flag, the shitty brother of the bull flag, which is personally my favorite pattern in the entire trading game. But bear flag, big move down, followed by it's typically actually if it's a bear flag, it's an ascending triangle. So it's just a mirrored bull flag. Bull flag, parabolic move up, big move to the upside, followed by a descending triangle pattern, creating the flag itself. Again, bear flag, you still get that flagpole with a big move down. In this case, it's a symmetrical triangle. So again, it doesn't have to be a descending or ascending triangle. That's standard, but a symmetrical triangle provides the same kind of psychological cues as either. And ultimately, at the end of the day, you guys, a trading pattern is just, it's psychology printed. That's really what charts are. That's why technical analysis works, is because you can see psychology in it makes psychology a visual indicator. Okay, that's just kind of how I think about technical trading and technical patterns. Okay, so Bear flag has played out. Bitcoin has broken the line of support on this ascending triangle pattern, or on the symmetrical triangle pattern. I'm sorry. And right now, downside is more likely. How far down do we go? I don't know. So let's remove these because it's going to look kind of stupid once we zoom out. So again, Bitcoin has played out that bear flag pattern. I do think that the next target for Bitcoin, unfortunately, is going to be the line of broken macro resistance. So Bitcoin has yet to officially test this broken resistance as new support. In my mind, that's the next, that's the easy next indicator that we can go to, is the previous line of broken macro resistance broke above that just over a month ago in mid-October. Kind of hugged that line, and I really thought that we were going to see a move up based upon this macro reversal following that breakout. But again, all the FTX stuff went down. That was a curveball. That is what you consider, at least for crypto, that's definitely a black swan event, which is an unforeseeable macro event. So, that rally was cut short, and right now we are seeing that kind of like our good old two-wave pattern, which is similar to a bull flag, bear flag, two-wave, but unfortunately the second wave now is going to the downside, okay? So price target for Bitcoin, in the case that we do continue to fall, in the case that Contagion is real and really does spread, I do think we could see like 11.5 if we happen to retest this on December 1st. But personally, again, I like to think about the 35% odds that I've set. I actually do want to bring back a bunch of those things for future reference. So let's bring back those guys. I do think that there is still a possibility that this is a bull. This is a bear trap. I'm sorry. That's a break of this bear flag. All the bears are getting excited. You're opening up some shorts. So I do think there's a possibility for somewhat of a short squeeze to happen here, and this to play out as a bull trap, a bear trap, I'm sorry, which is good news for the bulls. And again, you guys, it's the holidays. I'm staying optimistic. That's purely speculative, but again, I wouldn't be surprised in the slightest to see upside. But once again, 65.35 are my personal odds that further downside is ahead, and the previous line of macro resistance as new support is going to be my target range. Of course, that is always dependent. The price at least is always dependent upon when this trend line is tested. Let's close it out with Coinbase on the charts, and then we'll dive into these two. So Coinbase did reach a new all-time low today at a price of $40.55. Okay, that sucks. But again, you guys, that's just the unfortunate reality of where Coinbase is at. I don't have much to say here to expand on Coinbase aside from what we've already discussed, like over here as well. But Coinbase, from a technical perspective, is in somewhat of, we're in a range, and right now, although it's very, very possible that new lows are ahead, at least we are the lows, I think, are much closer than they are not. So as far as asymmetric upside potential is concerned, that's the first thing I think about as a trader when analyzing every single trade I ever take. Okay, it's asymmetric return. Does the upside potential outweigh the downside risk? And right now, if you have a long-term time horizon, again, personally not trading calls, thankfully, on Coinbase, but I do have a bunch of common shares. I added significantly to my common share position last week, of course, significantly relative to myself. I think the upside potential over even a medium, just maybe not short term, but medium to longer term time horizon definitely falls in favor of the bulls. I think Coinbase belongs above $100. How long do I think it takes to get there? I have no idea, but I do think that Coinbase is definitely going to see $100 plus at some point in the future. Yeah, maybe it takes a couple of years for the crypto space to really bounce back. Again, we've been here before. 2017 was the same thing. 2020, so wait 3 years. Give it another couple of years. Give it another year or two. Wait for interest rates to slow down, maybe revert the Fed to reverse course. I think Coinbase will definitely be above $100 again, which from here, if you got strong hands, if you're not using leverage, which I do not advise you to do, that's over 2x from here. Okay, so that's just my thoughts on Coinbase. Not much from a technical perspective. There is a range. So top end of this range is around $70. So even 40 to 70, you're looking at like a solid 80% upside if we just test the top side of like pretty conservative top end of this range. Okay, unconservative is like, of course, up here around like 75, 78, 80. But again, always go conservative. Don't get greedy. All right, that's Coinbase. I do want to read through these guys, and we'll just close it out with some Thanksgiving tops. So this was Friday's newsletter where I addressed kind of my thoughts on what like just how you should think about if you're a trader, if you're a swing trader like I am, this is just how I think about shitty days in the markets and frustrating times in your trading career, because they're going to come. You're going to experience plenty of them if you want to play this game, or if you want longevity in this game at least. And you need to learn how to protect your mental well-being and control your emotions and really disregard emotion at the end of the day. Okay, so annoying and frustrating or not, this is the game we play. And at the end of the day, the markets don't care about your feelings. Whenever I feel even a hint of emotion coming upon me, take a breath and remind myself to stick to my game plan. The reason I swing trade on a medium-term time horizon is because simply this is the style that I've made the most money doing over the years. Okay, the intraday volatility can absolutely get to your head, but if there's one ground rule I've set for myself in regard to this trading style, it's stick to the damn plan. Okay, so if you have a plan right now, my plan, as I say right here, is to wait for the S&P 500 to achieve my target range. There's a lot of resistance for the S&P, a few percent up from here. I do think that over the next week or two, even though today was bloody as hell, I do think that over the next week or two, the S&P can come up. If the S&P is doing good, the greater markets are likely doing well as well, because the S&P is kind of the king of the U.S. equity markets, and it really does. It's kind of like what Bitcoin, the S&P is to the U.S. equity markets what Bitcoin is to the cryptocurrency markets. Okay, so that, I'm sure you understand that. So I do think the S&P comes up. I think that if the S&P appreciates, the greater markets will as well, and that is where I will restructure my call positions. Again, if you want to join Waves Cap and know exactly how I'm trading all my calls, when I buy, when I sell calls, what I'm buying calls on, specific contracts, first link down below, you guys. But that's that, and then let's just talk about this. This is just from this morning. So I guess this is relevant the whole week. Let's just read through this, guys. So we're kicking off this compressed trading week with some expected volatility. The markets will be closed on Thursday for Thanksgiving, and they'll be closing early on Friday as well. So I believe the markets close at 1 p.m. Eastern time on Friday, which is pretty damn early in Hawaii. It's going to be an early one for me. But unfortunately, there isn't much to be thankful for just yet, because the streets are bloody. Volatility was to be expected, but this price action seems a bit extreme given the general lack of fundamental catalysts. So I'll talk about kind of what's going on here, but personally, I think beaten down investors may just be pulling any remaining capital they have so they can buy some Christmas presents, which is that Christmas liquidity crunch. So again, you guys, there are a lot of traders that are being scared out of the markets right now. But as I said in the beginning, hard seas, choppy seas make for skilled sailors, and we've been through the ringer already this year. 2022 has been a very rough one. Even from a trading perspective, it's just been a tough market to read because so much emotion and a manic behavior is involved, and little miniature black swans, gray swans. But again, you guys, it's all about learning. It's all about progressing as an individual and, of course, as a trader, and getting that money up over the long term. It's kind of like crypto, right? Even though we're seeing a strong pullback right now, when you zoom out, as long as there is an exponential uptrend, it doesn't matter if you are seeing ups and downs. As long as over the longer term you're going up and to the right, the volatility, the choppiness on the way up doesn't matter in the long run. So do your best to keep your eyes on the prize. Patience pays off, you guys. Patience absolutely pays off. And hope you enjoyed the video. So let me know in the comments down below, again, what you think about the current state of the crypto markets, what you think about the equity markets, what you're trading, what you're excited about. And if you're excited for Thanksgiving and the holiday season again, let me know what you guys are eating. Let me know what you guys are buying on Black Friday. And I'll see you downstairs in the comments. Until next time, you guys, always remember, take action, make waves. Peace.